I'd like to introduce Kevin Brown, the Associate Vice President of Development of the Montana State University Alumni Foundation and expert on estate, trust, and gift planning. And so now, Kevin Brown.
All right. Well, thank you, Mary. Happy to be here tonight and joining my first Northern Great Plains Resource Council meeting. So, yeah, I'm excited to share a topic that I am very excited about, the Montana Endowment Tax Credit, with all of you. So hold on just a second. Let me share my screen so we can get started. I got to make sure I got the right screen. All right. Okay. So hopefully, Mary, can you give me a thumbs up if you can see that? Excellent. Thank you. All right. So, yeah, again, happy to be here talking about our Montana Endowment Tax Credit. So give yourself credit, right? How can you take advantage potentially of this uniquely Montana tax credit? It is fairly unique. North Dakota has a similar program, but other states haven't quite caught on yet to our credit here in Montana. So what is the Montana Endowment Tax Credit? So it's formally known as the Montana Qualified Endowment Tax Credit. It's a credit that allows individuals or businesses to pay less in your Montana income taxes. So if you have a Montana income tax, if you owe taxes at the end of the year, this credit can help reduce it or even in some cases eliminate those taxes in the state of Montana if you give to a Montana qualified charitable endowment. So a little bit of history. It's known as the Montana Endowment Tax Credit. It's the charitable endowment tax credit, as I mentioned. It was originally enacted in 1997. It's been renewed every 6 years, but we're glad to see that in 2023, our legislature made it permanent. So we're very excited about that. Historically, Montana had one of the lowest number of endowments in the country. We just were not focused on endowments, and endowments are like your savings or retirement plans. They can help you have that wealth or have that sustainable funding into your future. Same for endowments for organizations or charities. So it was important for us charities back in 97 to say, how can we help grow sustainable funding, grow sustainable support for our charities and our programs in the state of Montana? And since that, more than $130 million have been gifted to Montana endowments. So it has worked. It is working. It was created to help make Montana and our communities better places, again, through that promotion of increased charitable giving to help supplement our state and federal support as well. So who's entitled to it? So first we'll start with individuals, and stick with me on this, on the term. It must be in the form of a planned gift. So I jokingly say that, if I give you $100 to your charity, I planned to make that gift. But a planned gift is an industry term that we use. I like to call it asset philanthropy, but even then it doesn't quite always fit. But it's things like charitable gift annuities, charitable remainder trusts, lead trusts, etc. You can see the list there. So it has to be in the form of that type of gift. Unfortunately, an outright gift doesn't qualify for the endowment tax credit. So planned gifts has to be to a permanent endowment. It gives the individual or individuals, if they're filing jointly, a credit up to 40% of the charitable deduction. We have some cool calculations we can do to help with all of those different types of gifts and what your charitable deduction will be, and then also what your Montana endowment tax credit could be. The maximum is $10,000 per year if you're filing single, $20,000 if you're filing joint. So must be held for at least 5 years. So what that means is we do a lot of these for individuals. We call them deferred charitable gift annuities, and we defer them for as long as we can to basically maximize the tax benefits. and they really don't intend to take the income from those types of gifts. Those annuities and remainder trusts have an income portion to them if the donor wants to have that income. After 5 years, state of Montana requires us to keep them for 5 years. Then after that, the donor could relinquish them, could go into their endowment. We hope that in that 5-year period of time that it grows based on our investment strategies. So on the non-individual side, right, we've got corporations, CNS, partnerships, LLCs, et cetera. Now, businesses, they can make outright gifts to the endowment or to a qualified endowment, but they get 20% instead of 40% of the charitable contribution, up to, again, a maximum of $10,000. So again, it can be outright. We had an initiative going on within our College of Agriculture where a number of our farmers had LLCs, so they took advantage of this through their company, which basically was a pass-through to themselves. So it can be beneficial to corporations and or even individuals if you're incorporated like some of our farmers are. So I've got some scenarios, and if you feel so inclined, you can raise your hand or type in the chat, and hopefully Effie can help me capture those. So we've got Fred and Wilma. Hopefully all of you remember Fred and Wilma. So they're in their mid-70s. They've heard from some friends at the Bronto Burger about the tax credit. They want to take advantage of it, but they want to give to the new Brontosaurus Arena. So what are some ways they could take advantage of the METC? And are there any concerns? Anybody can think of those or want to chime in? I know it's harder in a webinar. Well, first, if you paid attention, remember we talked about the key word is endowment. So capital projects like Brontosaurus Arena would not be an endowed fund. So they would be a current capital project. So sorry, Fred and Wilma, you're probably not going to be able to qualify. However, you could if you had, say, a capital projects endowment, like some organizations do have. They could give to that. And in that case, if they gave individually, they could get the 40%. If they gave through a business, they could get the 20%. So now we've got Underdog. Hopefully all of you remember Underdog. So he's got a company. He wants to challenge his employees to match his contributions up to $25,000. Well, the employees have heard about it. So how can they take advantage of that? Both Underdog and the individuals. It's a quiet group. Nobody wants to unmute themselves. That's okay. I usually don't unmute myself on some webinars either. So first, we want to confirm the fund is endowed. Then the maximum credit for Underdog and his company would be $20,000 or 20%, sorry. Basically, so that'd be $5,000, 20% of his $25,000 match. The employees would then have to establish some form of a planned gift, like a charitable gift annuity. And many of our charities have some minimums for their annuities. Like, for example, for us to establish a new charitable gift annuity, it's $10,000. If you already have one, then we reduce that to $5,000. So you got to check with your preferred charity on if they have any minimums for gifts like that. And we've got Velma, right? So she's got Mystery Materials and Pavers. She wants to make an in-kind donation and wondering if that would qualify. So she wants to provide some goods and services, plowing, etc. Anybody think this would qualify for Montana Endowment Tax Credit?
I wouldn't
Mary
think
shaking her head. No. Caleb saying no. You guys are right. Good job. Because it's not to an endowment, and it's not in the form of a planned gift if it was an individual, or even as a company. So she would have to restructure her gift to make it in some other form to take advantage of that. And lastly, we've got Leroy Jetson. So he's got Spacey Sprockets. He wants to make a $50,000 gift for flight training at a youth space camp. He wants, by making the gift through his company, how much, what is METCB? Sorry. My dog is going off and my doorbell's going off. Apologize for all of that. So
That'd be 10,000 for the company?
Yep. 20%, 10,000. Yep, you're right. And if he was an individual, he could get the 40%. So it'd be just under 10,000. So, or actually it'd be the maximum 10,000. Sorry. So I was thinking couple, not individual. So yeah, good job. So those of you who have had any accounting or have been paying attention to your CPA, my father was a CPA, so I tried to ignore this, but it got drilled into my head anyway. Tax credit versus tax deduction. If you remember, credits are better than deductions because they're dollar for dollar off of your tax return. A deduction is basically percentage. So that's why if we have a number of donors that say, hey, how much can I give that maximizes my Montana Endowment Tax Credit? How can I get all 10,000? What are those numbers, Kevin? And how can I help reduce or eliminate all or most of my Montana tax burden? And one thing I will qualify with is we're not talking about tax avoidance, which is illegal. We're talking about tax savings or tax reduction, which is perfectly within the law. So another question. So does it give to a quasi endowment? So as a former colleague of mine used to say, what the board giveth, the board can taketh away, right? So a quasi endowment functions as an endowment, is invested as an endowment. However, the corpus of a quasi endowment can be invaded. So it would not qualify as a permanent endowment under the Montana Endowment Tax Credit rules. As I mentioned, is it permanent? These are just some regular questions we get. Yes, we're happy to say we don't have to go through every 6 years. Prior to being permanent, I think the previous 2 terms, so last 12 years, last 2 times it's gone through the legislature, it passed with like 99 or 98%. So it's a good program in Montana that's very well liked by our representatives and our citizens. So again, I know we've covered this, but it comes up over and over and over, right? So what are the minimums or maximums, and will it ever change? So individuals, it's at 40% of the charitable deduction, 10,000 filing single, 20 filing joint. Corporations is 20% up to 10,000. And the good news is, starting in 2024, as per this last legislative session, it will increase to 15,000 and 30,000. So we're excited about that. We'll be able to give a little more credit. So more info. I am a resource. I'm happy to talk with anyone at any time. There's other charities, most charities, or many charities in the state. You could also go to the Department of Revenue. The Montana Nonprofit Association is a great resource as well. And most, if not all, CPAs and tax advisors, they've at least heard about it. And many of them have worked with charities or donors that have done and taken advantage of the Montana Endowment Tax Credit. So, and that is it for me. Pretty quick and easy. Again, there's my contact information. I know it will be sent out as follow-up as well, but happy to help. Love this topic and this opportunity that we have in the state of Montana. So.
All right. Thank you, Kevin. That's great. So I'm going to tell everyone about some other ways to give before the end of this year. And I remind you that we will have some questions. It's still saying I'm muted, but
I can hear you.
Yeah, I got a message in front of my face, but that's okay. It's working. So you can put questions in the chat as we go along, and we can use raised hands, and we can answer everything during the Q&A session. I do have a question we'll get to, but there's some other ways that you can, other tax advantage ways to give before the end of this year, besides using the Montana Endowment Tax Credit. The first is the required minimum distribution, or RMD for short, from your IRA. Required minimum distributions are minimum amounts that the IRA and retirement plan account owners must withdraw annually once they reach age 73. You can make a qualified charitable distribution, or QCD, directly from your IRA to any charity. These gifts count toward your RMD but are not taxable. And you can donate more than your RMD up to $100,000. The check has to be sent directly from your financial institution to the recipient. It cannot, if it goes through you, it becomes taxable income for you. You can also make a gift of stock. Gifts of stock are tax deductible, and there are no capital gains taxes to pay. This increases the value of your gift to the cause that you care about. Donor-advised funds are another great way to maximize tax benefits while supporting the work you care about. If you have a DAF, making a distribution is easy, and if you'd like to learn more, please visit our website. Employee matching is yet another way to give at the end of the year that can go twice as far. Many companies offer matching gift programs. 78% of match-eligible donors don't know their company offers the matching program. And only 7% of donors at companies with a matching program request to have their gift matched. So while you're doing your annual bookkeeping, you might also consider naming a nonprofit as a beneficiary for your retirement account, your life insurance policy, your bank account, or other assets. All you have to do to request a beneficiary form from your financial institution and complete it. It's very simple, and you can change it at any time. So we want you to stay tuned for our next webinar in this series that's coming in early 2024 as well. And now we want to begin the brief Q&A session. You can put questions in the chat, or you can raise your hand, either using the Zoom function or physically, and ask your question out loud. And I think we probably will get to everyone. So we will just keep asking questions as long as anybody has any. So, and I have one.
Excellent.
It's about the Montana Community Foundation. And maybe there's a difference between endowments and foundations. I'm thinking of a particular charity I've supported, and recently a family set up it's called the O'Reilly Family Foundation with MCF. And it's to benefit this particular charity. And they say that's probably the best way to make donations to the charity.
Sure.
Does that have any, does the endowment tax credit have any applicability in that situation?
It could. And I would check with the Montana Community Foundation to see if it is set up as an endowment, because what it sounds like is a private family foundation that is being, because what the community foundation's role, what they do a great job as, is helping other donors kind of manage their funds or manage their endowments, or even help other charities where, like, we're fortunate enough that we can manage and handle our endowments on our investing and our returns, whereas when I worked for the Big Hole Watershed Committee, we weren't big enough. So we would want to partner with, say, a Montana Community Foundation to say, hey, can you help us and help our donors if they want to provide funding or endowed funding to a group like that. So I would check with them. It sounds like it could. And if it is a qualified endowment, then yes, if you could make a planned gift with the community foundation. They do a number of Montana Endowment Tax Credit gifts as well. So,
and I just want to clarify, these planned giving implies that there's an annuity or a deferred.
Yeah, good question. The technical term, I don't want to get too technical, is called a split interest, right? So if with an annuity or a trust, you have an interest as the donor, meaning you get payments in some form, either annuity or in what's called unitrust, and then the charity has an interest. So they have an obligation to make those payments to you, the donor, for a period of time or your life. The most frequently used in the Montana Endowment Tax Credit is a deferred charitable gift annuity. So what we do, and that's a simple 2-page contract, we set it up. We say, okay, you're giving this much, and we're going to defer it out to your life expectancy, which based on some of our life expectancy tables, the accepted life expectancy table for the feds in the state. And don't worry about it. Like it can be a little like, wait a minute, it says I'm only going to live to be 86, right? Or 92 or whatever. That's just based on all those life insurance calculations of life expectancy. And that's as far as we can defer it. And what that does is maximizes your charitable deduction, which then maximizes your credit. So
I have a question.
Yeah.
So you mentioned the credit is there's 10,000 for individuals, 20,000 for married. So does it, if you're a household that files state taxes, married, filing individually, how does it get broken out in those circumstances?
Good question. So yeah, if you're that's filing married, filing separate, right? So in those situations, it's going to be based on your individual. Like you would have to give, and your wife would have to give. However, I think what we've done is it can still be a 2-life contract because you've both given. And what your CPA does is says half is yours and half is your spouse's. But that's something you would want to confirm with your CPA. The other thing too is we would take the one gift. Let's say you gave one gift, right? And we just split it into 2 different contracts, one for you, one for your spouse.
It can boil down the same way in the end, whether or not
boils down. We'll make it work, right? It'll boil down to where you'll each get the comparable credit so that you save on your Montana tax. So.
We have some other questions. I can't. If the taxes I owe are less than the credit, do I get a refund?
Good question. I didn't cover that. No, sorry, you don't. No. Dang it. Nope, it's a use it or lose it, right? Yep.
Yeah, okay. And what about just making a donation to an endowment?
Nope. Unfortunately, if you just make an outright gift to the endowment, it doesn't qualify for the tax credit. We hoped it would. We've been pushing for that and lobbying for that for a number of years. If you lived in North Dakota, yes, you could, but here so far in Montana, we haven't been able to get that passed. So.
Is this credit available only once per taxpayer? I guess lifetime, no. Are they in a lifetime?
Nope. Yeah. Nope. It can be every year. We have a number of, that's a great question. We have a number of donors that we call them their repeat donors, right? So they establish one of these a year, and then after 5 years, so they're in a cycle where they've done new numbers of these, where they're actually relinquishing one and doing another one, and just they love it and building their endowment over time. So, so nope, it's one per tax year. You can even split them, right? You can say I want to do one with, say, charity XYZ and another one with ABC, and your total credit cannot exceed 10,000 or 20,000, but you can combine them with different charitable gifts. So in any tax year.
Right. So Kevin, anything you've thought of that you wish you had included in your presentation?
No, but I did want to add one other thing on your qualified charitable distribution, if I can, that is exciting as well. So you got qualified charitable distributions are another great option. The other thing that sometimes people forget is you can actually start making qualified charitable distributions at age 70 and a half. If you remember, the required minimum distribution used to be 70 and a half. Now they've moved it to age 73. So if you're sitting there looking at, when I turn 73, I'm going to have a bigger RMD than I want, and it's going to push me into that next tax bracket, you can start making those qualified charitable distributions at 70 and a half, and help kind of drive down some of your IRA if too much income is a problem, potential. So, which some people do have too much in, or they don't want to take the income because it pushes them into that next tax bracket.
Okay, that 70 and a half is left over from the old age for when the RMD was required.
Correct.
I guess.
They left that to where you can still do a QCD at 70 and a half. But again, most people do it to help fulfill their RMD, but not be taxed. So
yeah, that's great. Hey. Okay, I think we've covered the questions that have come in here.
Excellent.
Last call, I guess. So, well, thank you, everyone. And especially thank you to Kevin Brown. And you can email any additional questions to Northern Plains. And we will be sending around an evaluation survey that's linked to the chat, and that will be emailed out. And so please stay tuned for our next webinar, which will be early next year, on estate planning. Also, in November, we have our annual meeting on the 10th and 11th at the pub station in Billings. It's lots of fun, and get to reconnect with people we haven't seen for a year or more, meet new like-minded individuals, and we can learn all about the great work that's been going on all year across the state. And it is a lot of fun. If you're not yet a member, we'd love to have you. You can join by going to the Northern Plains website and clicking Donate Now in the top right-hand corner, or by calling 406-248-1154.